Welcome to the Capital Link Shipping Podcast Series. I'm Nicholas Bornozis, President of Capital Link. Our podcast series is a means to educate a broader audience on topics of critical importance to the shipping industry. As such, our podcasts aim to be informational and educational. Every week, we host an exclusive interview with C-level executives and major industry figures. This is today our 8th podcast. I would like to thank IHS for sponsoring and conducting this podcast. IHS Markit is listed on NASDAQ under the ticker symbol INFO, and it is a world leader in critical information, analytics, and solutions for the major industries and markets that drive economies worldwide. The company delivers next-generation information, analytics, and solutions to customers in business, finance, and government, improving their operational efficiency and providing deep insights that lead to well-informed, confident decisions. IHS Markit has more than 50,000 business and government customers, including 80% of the Fortune Global 500 and the world's leading financial institutions. Headquartered in London, IHS Markit is committed to sustainable, profitable growth. And again, I would like to thank them for sponsoring and conducting today's podcast. We welcome our featured speaker, who needs no introduction, Mr. Joe Hughes, Chairman and CEO at the Shipowners Claims Bureau, in short SCB. Interviewing Joe is Jon Guy, Insurer's Correspondent at Fairplay, a well-known journalist in the maritime industry. Now, John and Joe have spoken to each other and have interacted in the past, and we look forward to today's discussion as well. Today's podcast is on the topic of marine insurance and where the market is headed. And now I will turn over the floor to John and Joe. Please go ahead.
Thank you, Nicholas. Always a pleasure to speak to you, Joe. Can we start?
Thank you.
Can we start with I think a more, sort of an overreaching sort of or overarching question. I think sort of in terms of the tone. What do you see as the present tone of the marine insurance market? Sort of how are global claims developing, and in which direction do you see premiums heading?
Thank you very much indeed, John. It's a great pleasure to have this opportunity of discussing these subjects with you, and thank you very much indeed, Nicholas, for making this opportunity available. I should just add by way of background that SCB is the manager of the American P&I Club, and I'm speaking to you, of course, from New York. And we are, as the club, a member of the international group of P&I clubs, and in addition to that, we also have a variety of other insurance products that we offer, including Eagle Ocean Marine, which is a fixed premium in the P&I facility for the insurance of smaller operators and local and regional trades. But I'll come on to that in greater detail. But to answer your first question, John, I think the tone at the moment is comparatively flat. I think that there has been some attenuation of premium over recent years in both the Hull and P&I sector. In fact, some people would say more than some attenuation, some considerable reduction in overall premium rates over the last 5 years or so. And I think that those conditions persist. However, in regard to the development of global claims, which of course is largely a driver of premium rates in the first instance, those have been relatively benign over recent years. Both from a hull and a liability or protection and indemnity perspective. I think there may be signs, however, that things are turning up a little bit. So far as the American club is concerned, we had a very good year in 2017, or at least 2017 policy year to date. But I think that across the market as a whole, talking to colleagues in other clubs and indeed in the larger market, there may be signs that both attritional claims and larger claims may be turning up a bit, but it would be a trend that hasn't been seen in the market for some years, actually.
Yeah, I mean, from that point of view, picking up on that, is that, I mean, obviously a lot has been done by the shipping community and obviously hand in hand with their underwriting and insurance partners. Is it a case really that sort of, some of these, we are seeing sort of safety standards continuing to ratchet up?
Yes, I think so. I think that shipping now has never been safer, and the adherence to regulation and all the other initiatives that ship owners have taken, supported by P&I clubs and other insurers, are actually showing real results. I mean, I think that although that's something of a soft element or a soft benefit of the manner in which the market has developed in recent years, I think it's nonetheless a real one. And loss prevention efforts, I think, have had a benevolent effect on claims. However, with world trade picking up, of course, and some degree of commodity price inflation coming into play, inevitably this has something of an inflationary effect over time on the level of liability claims in particular. So I think that we may see something of an upturn over the months and years ahead, but I don't think I see at this stage anything that's particularly worrying or very significant.
Yeah, I mean, obviously that brings us quite nicely onto the issue or sort of like the liability side or the P&I side. And of course, the international group with its sort of 13 members controls a huge percentage of, or actually underwrites a huge percentage of global shipping. And of course, it does actually enjoy currently an almost unrivaled position in the global marine insurance sector. But I mean, can you ever see a day when that dominant position will be challenged, or do you think the structure is such and the way in which it, and obviously the mutual nature of it is such that it sort of almost sets the bar too high for any new entrants to sort of make any significant inroad into that sort of P&I sector?
Well, your observations about the market position of the international group are well taken. I mean, they're absolutely right. I mean, collectively, the 13 clubs within the group account for something like 90 to 95% of liability insurance for world shipping as a whole. So it is a very significant position that they have in the market. The group, of course, and certainly the individual clubs within it, have been around for a very, very long time. We, at the American Club, last year celebrated our centennial. What I think is remarkable is that the American Club, at 100 years old, is the second youngest group club. Not the oldest or the second oldest, but the second youngest, believe it or not. The two oldest clubs, I think, will be 163 years old this year. So, if you look back over time and, the original formations of the international, what was then called the London Group, not the International Group, back right at the end of the 19th century, in 1899, in fact, the system and that which underpins it has been around for a very long time. And I think that actually speaks to the approbation in the final analysis of the shipping industry at large, rather than anything else. Because it's obviously a way, by virtue of the manner in which the mutual system operates and so on, that ship owners find to their taste, and it is something that they want to continue. And I think, you would never say never, but I think that the underlying strengths of the group are likely to persist, at least for the foreseeable future. The pooling system is a great strength that underpins that, the ability to buy very high limits of liability within the market for the market covers that we collectively have, the enormous brains trust which the international group represents. All these things are uniquely valuable to the shipping community at large. And of course, the way in which mutuals operate means that the ship owners themselves are highly participative in the manner in which their individual clubs and the system as a whole operates. So I think it's going to be a model that's going to be difficult to challenge, as it has been for many, many years. Having said that, and as I think, John, There is a growing fixed premium space within the totality of liability insurance. As I mentioned earlier on, Eagle Ocean Marine, the American club's fixed premium facility, is part of that. I think that there will always be a place for fixed premium insurance for liability risks within the market. I think that will appeal mainly to the operators of smaller vessels in local and regional trades. But I think that this primacy of the international group for ocean-going, internationally trading large vessels is likely to continue for the foreseeable future.
Yes. I mean, that sort of brings on quite nicely because, of course, as you say, the P&I sector very much sort of focusing on that sort of, the sort of global, the sort of global trade. Obviously what we have seen in recent years, and particularly sort of, I think I think the most pertinent example recently was obviously the Concordia, where the Italian government were quite got involved in and were quite sort of stringent on what they saw as how they'd like the removal of wreck handled. In your view, of course, that's just one way we've seen this, and of course the regulators are ramping this up. I mean, how do you view the issue of the greater regulation by coastal states? Including sort of new rules around emission levels. Sort of what can or is the P&I sector doing to sort of manage the regulators' expectations, obviously on behalf of the wider maritime market?
Well, I'd have a number of observations in relation to that, John. First of all, regulation, increasing regulation, is here to stay. The world is a much more regulated place in general, and that applies as much to shipping as it does to any other sphere of human enterprise or activity. Indeed, the clubs are probably more tightly regulated now than they ever have been in the past. I mean, certainly issues like Solvency II and risk-based capital here over in the United States governs the manner in which we conduct our own affairs from a financial and other point of view. But in relation to to shipping regulation as such, I think it can be said that the clubs have stepped up very successfully over recent years, and indeed for an extended period of time, in providing their members with the sorts of cover and the sorts of certification and so on that they need in relation to new regulations as they are developed. I mean, the beginning of this, I suppose, goes back to the late 60s with the Civil Liability Convention and the protocols thereto. Then we had the Athens Convention in regard to passenger claims. Then we had the Bunker Convention. We may have a hazardous and noxious substances convention coming at us. We have the Maritime Labour Convention. All these new forms of regulation, and indeed not just internationally but at the state level, have been responded to by the clubs in the manner in which they can provide certification and so on for the where it's relevant for the establishment of liability regimes as and a coverage for ship owners, and indeed the victims of maritime accidents where those liability regimes have taken place. So I think that the clubs haven't, I mean, there's only so much they can do in terms of dealing with regulation at a ground level, so to speak. I mean, clubs are meant to be reactive ultimately to those liabilities that ship owners are facing, but I think they've done a very good job over the year in providing the kind of framework within which the demands of regulators from the point of view of liability insurance can very successfully be met. And I think that is likely to continue for the future. So far as emissions control is concerned, those regulations, which of course are coming ever increasingly in force in various parts of the world, are not something that directly affect clubs as such, in the sense that coverage for those kinds of fines or the consequences of failure to use the right sort of fuel and therefore be in breach of the regulations is not something that clubs in the ordinary way would cover. It's possible, I suppose, for a fine or something of that nature to be covered by a club by reference to the exercise of a club board's discretion in an individual case. But to sum it all up, I think that regulation is something that will increasingly be the case, but if you look historically in appropriate cases where the clubs have reacted to growing regulation, they've acquitted themselves extremely well as a group in responding to ship owner needs.
Sort of taking that theme on a little bit, sort of what do you see as the emerging issues for the market? I think much has been discussed in some of the media around sort of cyber. But from your point of view, what do you see as the sort of emerging issues that maybe the ship owning community or the shipping community need to have on their radar?
Well, there are several issues here that relate, I suppose, to different aspects of the shipping industry and the perspectives of ship owners. So far as the economics of underwriting risk are concerned, and I speak really in relation to both Hull and P&I in this context, I think that the need for rates going forward to match anticipated exposures remains a central concern of the underwriting community as such. Of course, from a ship owner's perspective, the improvement in freight rates in recent months, and long may it continue, gives them a bit of a respite from some of the great financial strain they have themselves been under in recent years, and may in fact prove to be the backdrop against which rising premium rates may be justified or capable of being charged, particularly as I mentioned earlier, if claims start to rise a bit. So I think the economics of the balance of cost to cover, so far as ship owners and their underwriters are concerned, is an emerging issue, and we'll see how that develops over the months and years ahead. I think it can be said that while P&I rates have been relatively flat and are probably going to remain relatively flat for a while yet, there are signs, depending on who you're talking to from time to time, that hull rates may be increasing a bit at the moment. I mean, they've taken a big hit over the last decade, but there are signs that they may be turning up a bit, and I would imagine that P&I rates may slowly take the same direction. So that's the commercial side of things. Looking at the operational side of things, there are a number of issues that are discussed within the market at the moment. Cyber issues, of course, are one, as you mentioned. The effect of claims, or rather cyber attacks on ships and their impact to create claims. From a P&I perspective, actually, most cyber risks, except those that apply in relation to a war loss, are in fact covered by the clubs. There is no general exclusion of cyber risks in the rules of P&I clubs, expressed generally. That's slightly different in the hull market, as you probably know. The extent to which both Hull and P&I insurers are reacting to cyber issues has increased a lot in the last couple of years. I mean, if you'd spoken to most Hull or P&I underwriters 3 or 4 or 5 years ago about cyber risks, they would have probably been aware of, the general clause CL380, I think it's called, that's used appropriately on war and sometimes hull covers to exclude cyber issues. But by and large, they were not terribly well attuned to what these risks in practice were likely to be. That has changed enormously over the past year or two. And cyber exposures as a dimension of the appreciation of risk by marine insurers, I think, has increased a lot, and that will continue. Another issue is autonomous shipping. I don't think that there's any question that autonomous shipping is, as a matter of technological progress that's been made, something that can't come into effect more and more over the years ahead. I think from the point of view of the insurance of those risks, the issue is more likely to be what legal regime will apply to autonomous shipping going forward. That, I think, is the greater question, not whether it's technologically feasible. I think there's no doubt about that. And I believe that the Scandinavians may, in fact, be involved in autonomous shipping to a small degree along their coastlines already. I think, though, the real challenge lies in establishing a legal regime to deal with the consequences of loss in the event of an autonomous ship going wrong. Another issue is the issue of very large vessels, particularly very large container vessels, the practical and, by extension, underwriting challenges that they face in the result of a major loss, a major grounding, a major breakdown, a fire, a wreck removal, and so on, involving one of those ships. So far, those issues really haven't affected the day-to-day experience of marine underwriters in recent years. Whether they will in the future remains to be seen. But that's another emerging trend as well. I mean, there are several, but I think those are just a few to be going on with.
Yeah, because I think that's one of the. I know certainly one of the issues for certainly in terms of sort of the aggregation of the risks that the market faces. The container vessels and these new almost like floating cities that we have in these new super cruise ships. And of course, the issues around that is, as you say, not only the fact that engaging with the salvage companies in terms of how any sort of salvage operation would be undertaken, but of course the sheer scale of the exposure. And I suppose that flips back a little bit to the fact that that will have to be recognised, I suppose, in some ways in the underwriting approach from the market.
Well, indeed. I mean, the limit on passenger and crew claims that was imposed on group clubs back in 2011, 2012, I think it was in response to changes to limitation created by the Protocol to the Athens Convention at that time, and the fact that some of the very, very largest passenger vessels or cruise vessels could in fact create liabilities that would have gone significantly into the overspill layer of the international group pool or reinsurance arrangements. There was also discussion within the international group of 2 or 3 years ago in regard to taking out container ships as a special section for the as a special category for the calculation of excess of loss reinsurance rates because of the growing size of container ships and the possibility that they represented a disproportionate exposure to the group. There's no evidence of that at present, and it was decided in the end not to create a separate category for big container ships within the group as a result. But it's something, as I think you quite rightly say, John, that's always at the back of people's minds within the industry.
Yeah. I mean, obviously, we touched on it a little bit earlier on. Loss prevention is a large part of the insurer service outreach in the marine market today. But particularly amongst the P&I clubs. So how important is that, and sort of how in a way does that work?
I think it's vitally important, quite honestly. I mean, there's no doubt that loss prevention activity, particularly in the P&I world, has grown exponentially over the last 30 years. I mean, I came into this business over 40 years ago, and at that stage, really, the maximum amount of loss prevention amounted to pre-attachment condition surveys for ships. It was pretty simple at that time. But these days, loss prevention embraces a very wide range of initiatives. Initiatives concerning ship structure and engineering, navigation and other onboard operations, cargo handling procedures, the physical and psychological welfare of crew and others. Clubs give advice on regulatory developments affecting ships. They will give advice on the avoidance of legal and commercial pitfalls. All this now falls within the general ambit of loss prevention activity. I think it has fostered, along with regulation, to be fair, but I think that the initiatives taken by the clubs has fostered a culture of safety throughout the industry. It's a major part of what clubs do, and I suggest also as part of enterprise risk management for ship owners themselves. Loss prevention clearly is an important thing. I think it's produced tangible results across the industry. I think we agreed on that earlier on. It's a soft benefit in the sense that sometimes it can be a little bit difficult to calibrate or metricate precisely as to how these initiatives are working. But I think that if you look at loss exposures over recent years, some of that, reason will dictate must have something to do with loss prevention initiatives. And I think that, there is a general consensus within the industry that loss prevention does in fact work and, of course, is a good thing.
Yeah. I was going to say, obviously, we've touched on, and you touched on the issues around sort of autonomous vessels, which, as we say, the technology is there, and we see that as an issue for shall we say, the medium-term future. But I know certainly in the UK, in the mainstream media in the UK over the last sort of week or so, there's been a lot of debate about sort of China looking to further explore the use of sort of like the northern sea routes now that sort of global warming is impact. I mean, of course, that is going to bring some new dynamics for both the shipping market and, of course, the insurers.
It will indeed. It will indeed. I mean, P&I, I think there's probably a slight difference, actually, in the way that this is approached as between Hull insurers and P&I clubs. I mean, typically Hull insurers have, as part of their cover, IWL limit, institute warranty limits, which exclude certain parts of the world from general cover, or trading within those parts of the world from general cover. And if you go beyond certain areas, north and so on and so forth, then APs may be payable. P&I clubs, in the ordinary way, just as a matter of general cover, don't have such limits. So, I mean, theoretically, a passenger ship going up the Northern Passage has as much cover intrinsically, or notwithstanding the fact that it's going in that direction so far north, as a cruise ship would have, say, in the Caribbean in the summer or at any time of year. So, from that point of view, the expansion, I should say, of trade into these northern parts caused by global warming is not something in and of itself that challenges the clubs as their cover currently is framed. But if it increases significantly, and if there are claims arising from it that go beyond the normal, then it may be that clubs take a more focused view on this sort of thing.
Yeah.
I mean, we, for example, the American Club, have smaller cruise ships that go north into Greenland during the summer, and some that trade in the Antarctica during the winter, or the northern winter, I should say, their summer. They've not performed any differently from the general experience that we've had in the cruise sector or the passenger sector. But of course, if you do have a major breakdown or a major casualty, then the logistics of getting people on and off those vessels or getting some other kind of assistance to the ship in distress in those circumstances are very much more challenging than they would be, if a vessel has a problem off the Floridian coast or wherever.
I mean, you mentioned that about, obviously, the American Club. I mean, you celebrated your centennial last year in 2017. So what were the highlights of the year, and sort of how has the club changed over the more recent past? And obviously, what do you see that may be on the agenda for the club in the next 100 years?
Well, I mean, we had a lot of very good parties, John, during our centennial. No, but seriously, it was a year for reflection, actually. I mean, the club has come a great deal forward in the development of its business over the last 20 to 25 years. I came here in 95, actually, to fulfill what was then described as the Vision 2000 strategy or initiative to grow and diversify the club from what were then very, very small beginnings. I mean, we were then only about 3 million gross tons, believe it or not. We had 29 members, and we were 95% US or American flag. Now we are, including all our interests, probably about well over 20 million tons, probably 20 to 25 million tons, including our FD&D and charterers interests. We have about nearly 300 members. Our business is very, very diversified, both by reference to vessel type and to the domicile of the management of our members. We are about, just over 50% in Europe, Middle East, and Africa. We have a very strong position, as you know, in the Eastern Mediterranean, particularly Greece. Our US and North American membership is still very, very strong. We probably have about 25 to 30% still of our total entries from that part of the world. And, of course, our position in Asia, particularly on the fixed premium side, so Eagle Ocean Marine, is very strong. So we've changed enormously over recent years in terms of the reach of our club and our ability to service our members throughout the world. Back when I started in 95, we just had one office, and of course that was headquarters here in New York. But now we have offices in London, in Athens, in Hong Kong and Shanghai, and in Houston. And our global reach, as I say, has never been greater. In financial terms, we're very much larger than we were 25 years ago. And there's just been an enormous outreach. We weren't originally members of the international group back in 95. Well, we were reinsured members. We weren't direct members of the pool. That changed in 98. So there's been an immense change that's taken place. In addition to just the internationalization of the business and its further diversification by reference to vessel type and so on, we've also added new lines of business. Back in 95, we only did plain vanilla P&I. Now, obviously, we do freight, demurrage, and defense cover. We do charterers business. We have the Eagle Ocean Marine facility, which is immensely successful in what it does in the fixed premium space. We made an investment back in the middle of 2016 in American Hellenic Hull insurance company in Cyprus. That's done very well. And we are now, I suggest, as diversified, not only in terms of our membership and the different sectors of the marine insurance or the marine business that we touch, but also in the lines of products we have available to cater for the needs of our members and for the industry at large. I mean, I think we're very, very much part of the furniture in every part of the industry in which we trade at present.
Brilliant. If I can ask one final question, and of course you did open the door by saying that you've been in this market now for over 40 years. What are the main changes you've seen in the marine insurance industry over that time?
Well, where shall I begin? I think that the business, first and foremost, across both Hull and P&I, is immensely more complicated than it used to be when I started. I started in the late 70s, in 1977, in fact. And it was all relatively straightforward. I mean, you'll remember, John, I'm sure, although I don't want to suggest that you're any older or the same age as me. You would look very young, actually, as I recall, when I last saw you some months ago. But you'll remember, a market like Lloyd's, for example, was very, very different back then by comparison with how it's structured now. I mean, there were probably, well over 100 syndicates that wrote marine business at Lloyd's back in the late 70s. that's all changed in the sense that it's been much more heavily corporatized and very much more heavily regulated over the recent past. And that's a good thing. I mean, I'm not being necessarily nostalgic for, a golden era in the past. And equally, the clubs, I think, were very much more lightly regulated then. And the expectations of the markets and regulators and all those who are concerned with the marine insurance business at large were very much more limited at that time. But in the meantime, business processes have increased in their complexity. There is much more actuarial analysis conducted of underwriting activity, best practice, governance, all that sort of stuff is much, much more sophisticated now than it was when I first started. And as I said, it's driven ultimately by greater expectations of members and of regulators. Greater transparency, I suggest, exists now than was the case 40 years ago, and that is a good thing. We've always, at the American Club, been a members club, and the relationship we've had with our members has always been exceedingly transparent. But I think that across the market as a whole, you can see that trend having evolved in the last 40 years or so. There's much, much higher levels of professionalism all round, which is a good thing. But I'm happy to say, notwithstanding all that and the level of care and diligence and technicality that it implies, that the business at its heart really hasn't changed that much. And it's still very much a business based on personal integrity, relationships, verbum meum pactum, my word is my bond. And I think that will persist in our business. I think that's particularly true of the P&I clubs. I've often said that we're the saltiest end of the marine insurance business. We have very strong relationships with our shipowner members. They own the clubs. They're both insurers and insureds. So to that extent, I think that the fundamental dynamic of the business, particularly the P&I business, has remained constant over the years. I think it'll stay that way, but there will, of course, inevitably be continuing demands to keep standards high over the years to come.
Thank you so much. Well, as I said, that sort of brings us up to a sort of perfect timing. Can I thank you, Joe, obviously, for another scintillating sort of 35 minutes or so, as always, and can I hand back to Nicholas?
Thank you very much indeed, John. It's been a real pleasure. I'm honoured to have been asked to express those opinions. Thank you.
We have now reached the end of our discussion. I would like to thank both Joe and John for their insights and for the very interesting and detailed discussion we had. This podcast is available on Capital Link's website at www.capitallinkpodcasts.com and also is available on iTunes and Google Play. Capital Link aims to bring you weekly podcasts on critical topics for the shipping industry, discussing with industry leaders and decision makers. Thank you for being with us today, and we look forward to the next podcast.